how do you then choose to diversify into other crypto assets? And
I mean,
is it a hedge or what?
I talked a long time about the tokenization of the world, so I kind of got the whole concept. But Bitcoin was the pure play for the economic situation we were in, right? Made the total sense, right? Easiest narrative, first port of call, lowest down the risk curve. So that made sense. But as the rally started broadening out, we know that over time people move further out the risk curve. The next one out the risk curve is Ethereum, and then you can go all the way out to some brand new protocol that nobody knows whether it's going to work or not. Or
Coinbase just listed a coin called Shiba. So
yeah, exactly. So it could be Shiba, right? So people go out the risk curve, and that's normal, right? It happens in all financial markets. So I figured that was going to happen because that's how people do things. And at the same time, I'd started looking at the chart of Ethereum and thought, this is a really great chart. So I started writing about it, and particularly the ETH Bitcoin cross. So I started writing about it a bit, and hilarious. I mean, I write about it in Global Macro Investor, and they're all kind of institutional guys, hedge fund guys. They're all like, oh, that's fascinating. I put it on Twitter and was like, how dare you? You're cheating on us. I'm like, what? And then I started getting called a shit coiner and a spammer. And I'm like, wow, if somebody tells me not to do something, I'm absolutely going to go and do it. So I started doing the homework on it. And the argument was that John Pfeffer's article about why all coins go to zero except Bitcoin, I just thought, well, this is bullshit. So I went and disproved it and wrote an article about it. And he built this model around some sort of quantity theory of money model, and it's like it's never worked in the real world, so why is it going to work in crypto? And why suddenly do you say in that whole article, which is a great piece to be honest, but one of the things was, well, obviously Bitcoin has network effects, but nothing else does, and therefore these utility tokens go to zero. I'm like, let me check on that. So I just plotted them out. In fact, to be true, Remy plotted them out because he's better at Excel spreadsheets than I am, and he plotted them out. And guess what? You put on the number of wallets and the price, and lo and behold, there's a nice regression. They're basically to do with network effects. And then I looked at Bitcoin and ETH, and they looked identical, except ETH was earlier. Then I started putting the price of ETH at 5 million wallets and Bitcoin at 5 million wallets. It was exactly the same price, and the price structure was the same. So then I started realizing, well, maybe stock to flow is actually just an extension of Metcalfe's law, and all of this is network effects. So I started then trying to understand more about Metcalfe's law, how it affected the mobile phone industry, the internet, and then stuff like Amazon, Facebook, Google, and all of that. And so that was the huge breakthrough for me, was figuring out all of this, and that ETH was actually gaining faster adoption than Bitcoin. And we know it by the number of developers working on it, the number of applications working on it, and the number of wallet addresses, the rate of increase. So it's growing up about twice the speed of Bitcoin right now. So ETH's growing at about 100% a year, and Bitcoin's growing about 50% a year. The entire digital asset space growing about 113% a year, which is twice the speed that the internet grew at. So this is the fastest adoption of any technology in all recorded history. And ETH is the front runner right now. Now, it doesn't mean it always will be, but right now it's clearly winning network effects. And therefore, I think the network is undervalued.
The chat wants to know what Metcalfe's law is. There's a picture on the screen that gives the basic idea. It says
so the key thing here is you can have one telephone, two telephones, and I can talk to you. A bunch of us have telephones and we can call each other. But once you create nodes that interconnect with each other, you create millions of touch points. And that is the value of the network, because then you can use the network for various things. Mm-hmm. So it's that exact bottom chart is what happens when, particularly, for example, in this ETH space, as I said, you've got apps, developers, institutions, speculators, traders, I mean, everybody, investors, all on that network. That's an incredibly robust network.
How do you analyze what's occurring on the network? Like, do you value the type of activity differently? For instance, 2017 ETH was used for ICOs pretty much. ETH in 2020, we saw DeFi come along. You look on the Bitcoin network, it's primarily, sending and receiving for the value of the money. Does the type of activity on the network matter to you in terms of valuation?
The answer is I don't know. We know that the Bitcoin network is valuable for the attributes of Bitcoin. So there's going to be value, but is there a more finite value to that than there is to a multi-node version of Ethereum? It sounds like Ethereum should be worth more. That's not to take anything away from Bitcoin. It's not like Bitcoin's shit or anything else. It's like these are two different things. And the attributes, the network attributes of ETH are probably stronger. Now, can that change? I mean, there's a bunch of people who tell you the Lightning Network, Taproot, and all of this stuff is going to change the future of Bitcoin. But I'm not sure that people want to use this pristine asset as the basis of everything. I think they quite like it as the base layer of the lot. And so I don't think it gets adopted as fast as people think, but it will do. And all of these worlds will blur. There's not, it's not either or one or the other. I think everything kind of blends in some sort of interoperability, and many will have key functions. So as Bitcoin moves towards ETH, which is what Taproot and Lightning are doing, ETH is moving towards Bitcoin, which is ETH 2.0. So they're all kind of blending each other's attributes, and that's fine too. It's not a competition. It's a kind of symbiotic relationship, I think.
So you mentioned, as the bull run started, you moved down, you increased risk basically to increase returns. You moved from Bitcoin to ETH. How far into the gray zone of those assets did you go? Like, did you get involved into ETH competitors? Did you go down all the way to dog money, or?
Let me talk you through that journey, because it's interesting. How I dealt with it was, okay, I wanted to allocate money into a basket of other alts. I didn't know which ones. I knew ETH and Bitcoin I wanted. I have no idea which other project is going to get proper network effects. Everybody kind of screams about them all day on Twitter, but there's not many of them that have yet. Some of them are starting to. So I just said, right, I'm just going to choose a kind of basket of 10. And I'm going to have a mix of protocols like Cardano, Polkadot for interoperability. I'm going to choose some DeFi stuff. I'm going to choose just a bunch of stuff and just watch it. And they all went up 250% or something in a month and a half. I'm like, okay, that's quite fun. And then I was now fully invested. I had no cash left, and I got another slug of cash in. And so I thought, okay, what do I want to do here? So I added to my ETH, because I thought, okay, this is the biggest bet I wanted, switch more Bitcoin into ETH. And then I thought, okay, I want to get involved in some other stuff that I want to make some proper macro bets. And I also want to enjoy some of the fun. So the two enjoying the fun that I want to learn from, I bought Doge because I've got a thesis on it. And the reason being is I don't think people understand that it has a higher probability of network effects than people imagine, because you've got so many retail investors in it. All you need to do is create applications for it, and you've changed the entire game. So it's one half the war. So I thought, that's interesting. And everyone tells me I shouldn't do it, so I'm going to do it, which I told you before is a feature of how I think about things. Because generally when people become overly defensive, they've not thought it through. So that was my idea with that. And then I wanted to start placing bets in what I think is the future of it all, where the biggest applications are going to lie. And I'm actually not that interested in the protocols. I don't really care. I can't get excited. I'm not technical enough. So, people can argue all day about, who's going to win what war. I kind of like the interoperability. I'll buy a basket of that stuff, and that makes sense because that kind of connects everything. But really what I'm interested in is social tokens in the metaverse, because I think that's where the consumer meets crypto at scale.